the FTSE is going to go, especially in light of Brexit and what's happening at the moment. What does that mean for sterling? I'm also going to give you an insight into the S&P 500, small cap value companies as well, and whether the risk reward is worth it. So we should be live across all platforms now. I will not keep you long, but like I said, I want to cover all of those things. There's quite a lot to cover for you. So let's go. Let's start off with Airbnb. People say, oh, should I get in? What people often forget is, unless they were an insider, unless they had an allocation from Goldman Sachs, or they're one of the founders, they didn't get in at $60 or $68, at whatever price it IPO'd. The price they got in at instead, and I'll blow this up so you can see it in more detail, the price they would have got in at is the day one price. Okay, where it shot up to about, peaked at 163. So if you put an open order in to buy it, you got in at about $163. You didn't get in at this issue price. Okay, you didn't have a special allocation. So, okay, you got in at 163. Is that a problem? Well, it is if it closes at 144. So guess what? You end up losing money at the end of the first day. Right? Whereas you're thinking, oh, I've got to get in, I've got to get in. So what strategy might be adopted? It's one of the reasons why I don't get in on day one on Airbnb and IPOs generally. And I'll talk about IPOs in a second. There's a whole load more coming. Instead, I'd far rather have a strategy which, if it falls below its issue price first and then rebounds above it, then I might look at getting in, but I'll review it then. Or potentially, but I'm not so sure with this one, if it goes back above the day one peak. Let's put all that to one side. It's for speculators. I'm not a speculator, so I don't want to speculate on Airbnb just yet. Let it settle down. They only issued 8% of their stock anyway. And I'll come back to, I'm going to give you a whole database of all the IPOs that have happened. You'll be shocked at how few actually do perform well at all. You can see, for instance, here, here, this is on the y-axis, the market cap. So Snowflake, massive market cap, Buffett's got into it. And this, you can see the performance since IPO, and you can see that, yeah, well, here's some ticker symbols you can investigate in your own time if you wish. I'm not saying get into any of these. I'm just saying that this is how they've done, and they don't all necessarily give you a fantastic return. As you can see, there's quite a few which haven't done anything since then. So just be warned, especially, like I said, because of this first day pop. By the way, feel free to hi Mamta, feel free to ask any questions as well on this. By the way, if you want this database, and this is a database of the most recent IPOs, and I'll come to the S&P and other stocks and what you might want to do with your investments in a second, but this gives the names, and I've just shown some of them here, and I'll give you a spreadsheet of this. This is their one-day change. Most importantly, when they IPO'd, percentage since IPO price. What percentage change has there been? And you can see the vast majority are very well priced. They barely move. Percentage change on the first day, hardly anything. Okay, and percentage change since the first day, so since that massive pop, not much to write home about. I'll give you that as a downloadable Excel spreadsheet because I've done the analysis on it in a second. All right. First, I want to go back to the UK. For those of you watching this in the United Kingdom, some of you are watching it in different parts of the world, the US as well, and I'll show you some of those things in a second as well. Look, in the UK, and I had a friend of mine call me this morning, and she said, well, you know, we're looking at what to do with our pension and so on. Most pension providers will invest in funds which are UK-centric. They might put a tiny proportion into things which sound sexy, like global growth, Japanese growth, or whatever. Okay, the problem becomes big-size funds tend to track indices. And the problem with tracking an index is this is the FTSE 100, and that's the FTSE 100 since 1998. Okay, so it's at the same levels it was then. Most fund managers will benchmark themselves against the major index and say, hey, we've performed in line with the index. Well, gee whiz, thanks very much, my friend. This is one of the reasons why I'm always pushing people, don't just blindly give your money to fund managers, be your own fund manager instead. Incidentally, when it comes to the FTSE 100, in the past few weeks, yes, it's risen. Why has it risen? Well, because most of the companies in the FTSE 100 earn their profits abroad. So when they convert it back into sterling, their profits have increased because they're earning dollars and the dollar has strengthened. When it converts into sterling, buys more sterling, looks like their profits have increased. So in anticipation of a hard Brexit, or rather a no-deal Brexit, and sterling falling, people have been buying the FTSE 100. Okay, because they think those profits will show a bit of a rise. And where do they think it's probably going to go? Well, probably about to 7,500. So in the short term, yes, it might look sexy. That's short term. I'm not going to gamble on any short term news. And by the way, if we get a deal, then guess what? People will also push it higher. I do not want to speculate on deal, no deal, and gamble over the next couple of weeks. But the FTSE at the moment, as it has been for the last few weeks, looks like a one-way bet upwards. But the peak isn't far to go. Yeah, I mean, look, it's not very much. So I don't want to just look at domestic markets. And here's another reason why I don't just want you to look at domestic markets. It's this. As I've often said, the UK-US pension poverty gap. In other words, if you're British and your things are given to British fund managers, they tend to invest domestically, and the domestic market tends to perform more poorly than a global set of investments. A global fund could include Dow, S&P, NASDAQ, Russell 2000, which is a broader, smaller cap US-based index. And if you look at the UK, well, I'm afraid over the last 10 years, it's at the bottom over there, and the American index is high. Now, that's not to say I'm anti-UK. I'm British. I want these American companies working for me, and I repatriate my money over here and spend it in the UK. And it can be in my SIP, it can be in my ISA. You can own global companies in your SIP and ISA anyway. My point is, when you give it only to a fund manager, this is what happens. They end up investing in just the domestic market, whereas I want you to invest in a global set of equities. And the poverty gap becomes British funds, British pensions. You're up 27% in the last 10 years. Americans, well, they're up somewhere between probably 160 to 460%. If you want to know one of the reasons why it's one of the richest countries in the world, bang, right there, right in front of you is one of the reasons why. It's not because the people are clever, it's because they tend to invest in a narrow group of companies, which self-perpetuatingly have self-evidently consistently done rather well. Anyway, enough of that. I want you to think global, and we'll look at some equities in a second. I want you to be your own pension fund manager as well. Okay, at the very least, be informed about what your fund manager is putting his money into. Brexit and GBP, like I said, what should happen? This is sterling against US dollar. Now, it's currently at about 1.35, okay? And as you can see, it's been inching forward as we've been thinking there's going to be a deal, right? It hasn't fallen sharply. Now, what really should be happening, given what the Prime Minister said, is that should be dropping. Given the prospect of no deal, it should be dropping lower, which would mean the FTSE 100 rises for the reasons I've said. And if there is a deal, that should perk up probably to about that level. I'm not going to gamble on which way it's going to go on that. I would far rather just in the short term follow any trends. So just be aware, it is volatile, it's speculative. I'm not a speculator, I'm not a gambler in the short term. I'm just giving you a view on what looks the more likely scenario there. One thing I do want you to be aware of, one thing I don't really want you to do, okay, is this. I don't want you to be sector biased. There's a lot of talk out there from journalists saying, oh, you should go into this sector now and this and that. Well, if you look at this since November the 10th, I've just taken 1 month. Okay, well, the sector which has done the best, it's not one I would have guessed at, has been energy. Okay, the energy sector is up 25%. And the one which has sort of dropped off a bit after doing not too badly has been materials. Now, ex post facto, it's the or is it utilities? Can't even, sorry, it's utilities. It's utilities which has done the worst. It's the job of a journalist after the event to explain to you and sound really smart. And you can sort of see Bloomberg over my shoulder, and they'll do this as well as anybody else. They're the best journalists, but they'll still do this. They'll say, oh, yeah, well, of course, energy went up because we expected a rebound in the global economy and a vaccine came about. And it's obvious. And of course, materials which are done right, blah, 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 blah. Okay, they're making it up as they go along. The fact of the matter is it was guesswork which sector was going to do best. So I'm not sector biased. I want companies which have got, and I'm going to show you the criteria that I want them to have, relatively low valuations, good growth, dividend deals, high average returns, low volatility, and consistent cash flow growth. And you might say, well, you want the bloody moon on a stick. Yes, I do. I want the moon on a stick. It's my money. Okay, so I'll stick it where I want. Now, I'm also not factor biased. What does that mean? That means I am not biased towards people, you know, and journalists go, oh, go for small cap. It's the flavor of the month. And the job of fund managers is to seduce you into their latest product that they've launched. And they will launch, and you can play bingo with the names they'll come up with. They'll say UK growth, UK value, European momentum, global small cap, global low volatility, India high dividend yield. All of these sound sexy and you'll put your money into it. Asset management is 90% a marketing business. It is not an asset management business. And I'll tell you why. Okay. Which factors have done the best over the last month? Oh, it just so happens it's small cap. So they're going to try and sell you on, oh, now look at small cap value. Actually, what you really want, and many of you listening to this are business people, you know what really matters. You don't change your sector in your business every month, do you? No, you know what matters. It's going to be cash flow, profitability, dividends, revenue growth. Okay, it's all of those things and consistency in those. And you're going to be in the same sector you were in 10 years ago. Which companies are going to win? The ones which consistently deliver those. So I want companies which are high growth, low value, strong momentum, don't really care about their capitalization, low volatility, high dividend. I want it all. Of course I do. I'm not going to gamble on which one's going to win this month and next month. That's for the marketers to do. The key criteria I look for, therefore, and I suggest you do as well, value, growth, income. And I've told you before where you can screen. There's loads of free tools on the internet to screen for these things. Yahoo Finance, for instance, has a screening tool. Valuation, growth, income. Cash flow. Croquis is something which was invented by Deutsche Bank and then provided by Goldman Sachs Asset Management to their wealthiest clients. They worked out that companies with the highest cash return on capital employed, the top quartile, the top 25% of companies, generated on average 30% per annum return. Sounds good, doesn't it? And that's why Goldman Sachs charge the fees they do. I think that's unfair. I think it's unfair that you've got to have 10 million pounds to be a Goldman Sachs private wealth client. Instead, I stole their data and I can tell you what the croquis are of some of the good companies. I've given the example of T. Rowe Price over here. We want croquis, the cash flows to be high, but I also want value, growth, income. I want upward momentum. I want the company to have performed well over the last 6 months. I'm not bottom fishing. I'm not going to look for crisis companies and speculate they're going to jump up in the hope of somebody somewhere tweets the right thing. No, I want them to have consistently performed well. The Sortino is probably one of the most important things that the wealthiest family offices and sovereign wealth funds would ask funds, hedge funds or private equity funds before they give them the money. Well, hedge funds, they'll ask them, what's your Sortino? And Sortino is basically this. It is a measure of the average return of a company and how consistently it hits it. For the mathematicians amongst you, if you look at a normal distribution curve, it's a measure of the standard deviation, but looking at the upside deviation as being good and the downside deviation as being bad. All right. But anyway, the rest of us, ideally, I want that to be above 1, but I'm happy if it's above 0.5. Return alpha means the ability to outperform the market. Guess what? You need to outperform the bloody market. Okay. Altman, don't worry about it too much. It's a measure of the likelihood of a company going bankrupt. Anyway, all of those factors. What I'm saying to you is this: when you're picking your own stocks, and I want you to be your own fund managers, is filter, filter, filter. So you're looking at everything. Do not gamble and speculate short term on what fund managers are telling you. And as a bit of a sort of recap, do not be lured into journalist comment on growth, value. Their job is to get you clickbait to click on it. Otherwise, their editors will sack you. You want everything. No asset management company in the world will say, we've got one fund. It's the best of the best of the best stocks ever that we're picking. Why? Well, because they can sell you more products. Why would they sell you only one? Amazon doesn't sell one product. There's lots of different products, and you only have one need, a return with a certain volatility around it. So there you go. All right. The other factors, remember the numbers I always tell you in these live broadcasts is 12, 15, 25. 12-month holding, because you can't hold for a day. It's too short. You can't hold for 10 years because the world changes. 12, the research shows, is a good number. Okay, 12 holding period, 15 stocks. It'll be diversification enough for most private investors, all right? And 25, if it drops 25% from the highest point since you bought it, get out. So it might double in value. If it drops then down to just being up 75%, get out. Okay, if you want to see some of that data, if you want to download that Excel spreadsheet of this and you want these charts, all these images, all the rest of it, I've put it on my Telegram channel. If you don't know what Telegram is, it's like WhatsApp. It's on my Telegram channel. It's on there. I put all this data on there regularly. If you want to get to my Telegram channel, just go to alpeshpatel.com and you can download. It's free instant messenger market insights. I'll give you all of this. You can also get a copy of my book for free on there and all sorts of stuff there as well. So As I do in closing on these things, I always do the recap. Like I said, all the people getting excited about Airbnb, the major problem you have is you would have got in at $163, which was the opening price on day one, and now you're sitting on a loss down to 144. That's my major problem getting in. In future, well, we'll have to see. This data on IPO performance, it's not phenomenal. It's not a no-brainer to get into IPOs on day one or whenever. There's relatively few which even have a positive return. Okay, that's all in a spreadsheet. If you want to see how those performances are, manipulate that, go to my Telegram channel. Just go to alpeshpatel.com and you can download that Excel spreadsheet after this. After I finish this broadcast. And like I said, I want you to diversify away from just holding UK companies alone, because I want your pensions to do well, because UK alone, well, we're at the levels we were in 1999. If you speak to your pension fund manager, it's probably generated you about 1% per annum in the last 21 years. Okay, sack him. Be your own fund manager instead. Brexit and the FTSE 100. Like I said, the FTSE should rise because either we get a deal, everyone's relieved. We don't get a deal, the pound falls. FTSE 100 companies' profits are mainly in dollars, so the pound falls. It translates into greater profitability on the books, notional profitability on the books. So guess what? Their share prices rise either way. UK, but that's only a 1 month thing. I'm not going to gamble on a 1 month trade on that. UK-US pension poverty gap, like I said, another reason why you should not just only be investing in UK companies just because you live in the UK. You should be looking at global companies, especially if you're like me and you're a patriotic British person. You want to own things, have an imperial mindset, okay? Own things around the world, including, you know, I've got Apple working for me, I've got Square working for me, I've got PayPal working for me, I've got Costco working for me, I've got Tech Target working for me. Thank you very much to all of those companies, and Facebook, obviously, and Alphabet work for me as well. Quite right. I've mentioned that one before, and not to be sector biased. Anyway, I'll leave it at that. I'm keeping these broadcasts short and sweet. I hope that was useful to all of you. Like I said, I'll put some of the slides up on, well, I'll put all the slides up on the Telegram channel. If you want the Telegram channel, just go to alpeshpatel.com and you'll see it on there. Yeah, I'll put the downloadable database of the IPO prices so you can manipulate and play around with that as well, since a lot of you have asked me about Airbnb and the other IPOs that are coming out and all the rest of it. So, okay, hope you enjoyed all. If there's no other questions, hey, Simon, my pleasure. Thank you, Rita. Good to hear from you. Philip, you're right. There's limited data when there's an IPO. Obviously, there's the historic data, but it is private information till then. So thanks, everyone, for being on. And I'll do some more of these in the coming days. Thank you all very much.